Mr. Ashish Bhandari, MD and Chief Executive Officer, joins us with his presence on market today. And it's been a very, very strong performance coming in from Thermax. Remember, anything and everything that goes into the back end of factories, especially on the heat sustenance side, is made by Thermax. Mr. Bhandari, welcome. Good morning. How has the past quarter been, and how do the next 3-4 quarters look to you in terms of order book?
Very good morning to you and to all your viewers as well. And thank you for the kind words about our performance. I would just add that as a company, we're not just at the back end and not just in heat recovery solutions. Almost anything relating to energy and energy transition, from a capability set, whether it is heating, cooling, water conservation, air pollution management, variety of different solutions, renewables across the portfolio, Thermax would have a role to play in. In terms of performance, the last quarter was satisfying on some counts, and on some other counts, I would say we still have work to be done. The good part was, of course, the overall stability in the market that allowed us to put out a good set of numbers on revenues and on profitability. Yeah, which is a commitment that we had made, that we wanted to continue to take the business towards a more differentiating set of capabilities, which came with higher margins, and we are able to do that across all of our segments. And that, I think, continues, I expect, for the next 2-3 quarters as well, given the environment we are in. The challenging part is that some of the larger and some of the more L1 tender-based deals have relatively gone down. Yep, a year and a half ago or a year ago, especially in refining and petrochemical, we had a bunch of big opportunities. Those are no longer there. What I see in the market right now is still a lot of opportunity, but it requires a lot more discussions with customers, a differentiated offering, certainly not something that is tender-based. It is more driven by kind of proactive interactions, having an offering which is unique, bespoke, specific for the customer.
Very good morning to you, Mr. Bhandari. Sakshi this side. Good to have you with us. I wanted to discuss with you on your operational performance and on the margins as well this quarter. EBITDA is up 45.4% at 204 crore rupees. So a remarkable jump there on a year-on-year basis. The margins have also improved to 8.9% versus 6.8%. Help us understand, is this performance sustainable for you? What is the outlook for the next 2 quarters? And do you also see a vision for double-digit margins pretty soon now?
Look, I think double-digit margins will still take some time. I think if you take the last 3 years, almost every time we think we know what is going to happen in the future, and our predictions come wrong. Yeah, COVID, the wars, the recovery post-COVID, almost everything was tough to forecast. So what we are focusing on, things we can control, which is our backlog, our operations, and making sure that we are doing justice to those. And there, I think I'm reasonably comfortable with what we have. Yeah, traditionally, some of the largest projects that we have had have also been some of our less profitable ones. As I look at our backlog, I think it's reasonably clean, which is symptomatic of the kinds of orders we have picked up over the last year to 2 years. Right now, I think in terms of margins, as you look to the future, I would say half of what we did this quarter will be sustainable. Half had some elements of one-time kind of things, specific projects that had particularly good profitability that got delivered in the quarter, which may be tougher to sustain. Not impossible, but tougher to sustain. So I would say half and half. Yes, some portion of our improvement in performance is targeted and driven by some of the actions we have taken.
Okay. So talk to us about, your CapEx plans when it comes to renewable power and your electrolyzer production, which you had recently got into, and how, big a portion as a revenue contributor is this segment going to be for you going forward?
Look, overall, from a capex perspective, we will be in a mode that I think over the next 2 to 3 years to build new capabilities, we will be investing. Yeah, whether it is electrolyzer production or whether it is something else, that you will have to wait and watch. And this is not just in terms of some of the newer things that we do. Even in our traditional businesses, we're just adding a new plant for our water business. We will be expanding capabilities and production on our chemicals business as well. So we continue to expand in our traditional lines, but even in some of our newer capabilities, we see a lot of room for doing new things. And that comes across as technology investments, partnerships, new manufacturing capacity, all of these things. So the next 3 years will be capex heavy. One particular area where capex will go, and it is already going, is investing in our renewables business to put together a platform for delivering hybrid renewable power to our customers, CNI customers. That's our focus. And whether that is in terms of solar, wind, or whether it is in terms of renewable and biomass based steam or power, both of those options we are very, very open to. And both of these platforms, we call them TOSL and FEPL, continue to ramp up and expand for Thermax.
Mr. Bhandari, let's focus on two spaces, green solutions and chemicals. You've
Sure.
set up a B2C chemicals plant at Dahej. Any feedback in terms of how capacity is improving in terms of utilization in this particular space? And then green solutions. Let's
Okay.
look at that too. The entire industrial conglomerate of the Indian corporate sector is moving towards green solutions. How do you see these two sectors, which are fairly new to Thermax, contributing to the top and the bottom line over the next 4 quarters, sir?
Look, first, chemicals is a relatively very old business within Thermax. Some of the focus and the growth aspirations in chemicals are renewed in that sense. Our new plant in Dahej, which is not B2C, it's all B2B. There's very little that Thermax does, or practically none at all, which is B2C. On the chemicals front, we are continuing to invest, continuing to grow, not only in the lines that we are in, but increasingly in adjacencies as well. The plant in Dahej is about 70% capacity utilization now. It took a little bit of time to stabilize, but over the next year, year and a half, we expect to reach 100% capacity, at which point the next capacity, which is already in play, and a new plant which is under construction, will come online. Chemicals, we expect to be a long-term growth play for Thermax, where we expect double-digit growth and double-digit profitability for at least the next 3 to 5 years. Here, we expect to continue to invest and continue to grow this platform. Green solutions is another area which was a smaller part of Thermax, but both TOSL and FEPL, which together are probably 400 odd crores within Thermax right now. In the next 3 years, I expect them together to be more than 1,200 crores, yeah, somewhere in 1,200 to 1,500 crores, and be a bigger part of Thermax and continue to be a big part of Thermax for the next decade. Yep. And this is because our customers are asking for these differentiated solutions, whether it is biomass-based steam or power and adjacency-related solutions. We have a unique set of technology capabilities, offerings. We are going deeper and deeper into the supply chain, and many of our customers are open to paying more for some of these solutions than their coal plants or otherwise. Yeah, so we see a big change in the Indian market in terms of openness to some of these newer solutions. Similarly, on the renewable side, almost every company that I know, including ourselves, yeah, we are very, very hungry for renewable power, knowing that some of our the biggest portion of our carbon footprint comes from electricity, and that a good chunk of that electricity today is based on fossil fuels. And over the next few years, we want to take as much of that electricity to renewable as we can. And so we ourselves are looking out for green power for our own plants. And we know many of our customers are doing the same. So we are offering these solutions to our customers, wind and solar for now, but increasingly storage and overall hybrid solutions. Over time, we expect to take this to hydrogen and some of the newer applications as well.
Okay. Mr. Bhandari, would you also be looking at, inorganic opportunities, if any, for the next leg of growth? Any acquisitions that you are already having on your radar? How do you plan to deploy the cash on your books, sir?
Look, our deck is reasonably active right now. We will be looking to make moves. We will be very conservative in terms of industries and valuations that we are targeting. But that said, we do realize to add new capabilities, we will have to be active on the M&A front. Let's wait and watch, but this is something that is part of our plans as we look to the future.
Mr. Bhandari, a bit of views from your side on the industrial products segment. Of course, that's the largest chunk of your business, contributes substantially to the order book, and has been the mainstay of both the top line and the bottom line. India is supposed to be in a fabulous capacity expansion cycle. When you look at your contributors to the order book, where is the maximum demand for your products coming from?
I think the best part of the growth over the last 3 years has been that we have been sector agnostic. And it has been a beautiful part to just watch. And our industrial products is a good example of that, because our industrial products sells to every industry that you can think of. Yeah, we sell, of course, to steel, cement, some of the larger industries out there, but then also to textiles, to rubber, to tires, to the agro, food, pharma, chemicals, variety of different industries. And almost quarter by quarter, we have had different segments coming in and leading. Yeah, and the sectoral shift has been moderate. But if I look at a 2 to 3 year period, almost all of these sectors have grown substantially. And our industrial products is where some of our most profitable growth has come from. Yeah, the business is practically double of what it was from 3 years ago. And we sell through more than 120 distributors and channel partners across the country, beyond just the direct business that we have. And across all geographies of India and across all segments, we have seen very good upticks if you take a consistent period of time. I think if you take quarter by quarter, the sector shift, right now, I would say steel has done well, edible oils, some portion of commercial has done reasonably well. But if you take a year and a half kind of a picture, almost every sector has done very well. Yeah, which I think is, again, an example of India's broad-based growth over the last couple of years.
Right. And with that, Mr. Bhandari, we'd like to thank you. Very few people have had the pleasure of watching Thermax grow over the last 25 to 30 years. And I'm one of them. I distinctly remember the IPO that Thermax launched in 1996. Mr. Agha was at the helm at that point of time. And it's done a fabulous job in setting up the backbone of India's industrial might. If you look at the 10-year CAGR on Thermax, that's 16.7%. It's outshone a lot many indices and a lot many of its peers. Mr. Bhandari, our best wishes to you, sir, for a fantastic couple of years ahead. Truly, we are in a Goldilocks moment as far as the Indian corporate life is concerned. Thank you for your time, sir.
Thank you very much.
If you like the video, do like, comment, share and subscribe.